what would be amongst the, 1, 2, or 3 reasons why an analyst can get a bearish quad 4 signal and bearish economic quad 4 data, but stay with something that only works in quad 2?
Well, wrong sometimes. That's a big problem. And you get, as an analyst, you have this, I think it was a little bit like the sunk cost fallacy, where you spend a lot of time understanding something and you keep getting disconfirming evidence, but you spend a lot of time on it and you're really personally invested in the thesis or to exploit the narrative, or it makes sense to you. And you have to just like let go. And that is hard. That is like, letting a child go up to college or something. And you just have to it's very hard to do when you get invested personally in sort of work and understanding, because you write down all of that, work. You can come back to it. I mean, I think that's the part that people that you do so well is you're just like, not now, right? Maybe later, maybe not. Who knows, right? It's just a ticker. But when you spend a lot of time in the weeds, you can get stuck. And at the end of the day, it is just a ticker, and it makes absolutely no difference. And you never have to own anything. You never have to short anything. And it's really important to remember that. And that's very hard to do. I think people's politics get in the way of investing a lot. That can be, like a personal driver or narrative. What's nice about the macro framework and the signaling process is you get this push, right? You get this framework with alpha that you can look at and say I really like the idea of being long manufacturing after a long period of contraction or whatever. Maybe that's not the best thing to do right now. Maybe we'll come back to that when we get more clarity on this on again, off again, Mr. Miyagi tariff policy or whatever it is, right? So that intellectual flexibility is very hard to develop. And occasionally there are idiosyncratic reasons. Like there's something so cool, that I'm willing to stick with something because it's very specific to this company's rider, right? Like their depreciation accounting, done this a long time and know what I'm looking at. It doesn't mean I'm going to be right, but I'm right about that situation.
The faster you get to saying, hey, look, again, these are not your kids sending off to school. To your point, they're tickers. And just because you did a lot of work on it doesn't mean you stay with it. I mean, I think of a lot of examples, but anytime you say idiosyncratic, or as the hedge fund community would say idio, you're saying, idiot, I'm smarter than the market. That's what you're saying, right? Let's be clear. I got it. Nobody gets this yet. Well, if the market gets you first, you lose money and you're not good at this. So
I think in this seat, when you've invested a lot of time and effort and you really like your thesis and you think you're super smart, it can be hard. It can be hard to let that go. But in reality, it's actually less work and very easy on some level just to move on. And the most popular note we ever wrote by far, the one almost everybody replied to, the title was, "We're wrong here." Not even joke. It was just, "We're wrong here." And I'm just going to let it go. And it was exactly the right thing to do. It was quad 4 and it was a cyclical name. And yeah, I think you'll find it very liberating. That's kind of Soros's point, right? It's very liberating to just be wrong and fucking move on. It's okay.
I find it, I know that the analysts, it's kind of an excuse that it's hard to do, but because you've done so much hard work, but I work pretty hard and it's not hard for me to do. I mean, you can rewind the tapes on why I bought Canada. Sound pretty compelling, right? 4 straight quad 2s, finally getting rid of Trudeau, political change. But then I sold it all because the Canadian currency and the Canadian stock market broke trend. It's not like I don't believe the longer term thesis. I'm from Canada. I got a lot of history with it. Maybe you need that for me, a little channel checking. No. It actually, if you can get experience under your belt, successful experience, while making these decisions faster and more accurately, you're going to get paid more and you're going to do better. That's why you're getting paid more, because you're doing better, right? There's no value in bag holding something long term for a 20 to 40% decline because you like it long term. Especially when you have the number one team on the street to help you risk manage that. I just, with experience, that gets harder if you don't have the ability to change. It's an open and honest discussion. We are humans. And if you do not prioritize the quant when you're looking at things quantamentally, you're going to get quad forward.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.